Question number 4. So if Mike made $150,000 last year and never claimed it, what did Mike just do? Well, in plain words, Mike just overpaid. Mike handed the IRS money it didn't have to, they never asked for it. And the frustrating part is, the IRS is not going to call Mike and say, hey buddy, you left some money on the table. That is not how this works. The IRS is in the business of collecting. Their job is to simply enforce the rule that Congress made, but they are not in the business of making sure you use every rule available to you. That is your job. And more importantly, that's your tax professional's job. Mike actually needed someone in his corner who was paying attention. His finances. And the law was designed to help him. Mike just didn't know it existed. Why? Because the person Mike decided to do his taxes with was probably not the best person for his business. They probably did not update himself or herself about the changing landscape of the tax law. They probably did not understand how important it is for his or her client to have that valuable money with their own possession. How important it is for his or her client and what the value for that money is for their customer. If you try to cheap out on this, as you can see, it costs you quite a bit and that money usually never comes back. And if they can't go back and fix it, then we will. So at this time, if you go back and look into your tax return, if you're seeing those deductions are not available and you go back to that accountant and ask them to fix it, if they don't know about it, they're not sure about it, and if they start to give you mumbling answers, then you need to find a different accountant. Or call us and we will fix that for you. Imagine how much money you can get back if you had known this deduction was available to you. And I'm sure you can put this money to use better than any other government agency can do. And for sure, this money would have not funded the waste, fraud, and abuse that we have been figuring about these days. Less money for hospice fraudsters, less money for fake daycares, less money for the Leering Center, and less Medicaid fraud all day long. All right, that's just as far as how I will go politically, but you get the point. And this is exactly why I made this video, because there is a lot of mics out there and I would rather they find out about this from me for free and take some action. And if nobody will help them, well, you know where to find us. Question number 5. Does your business structure matters? Well, if it matters more than almost anything else in a tax life. Here's the honest truth. True business owners can make the exact same kind of money but pay complete different amount of taxes legally just because of how their business is structured. Congress designed QBI specifically for pass-through entities only. So if you're still operating as a sole proprietor because that's just how you started and nobody else told you to revise it, you might be leaving deductions on the table that a different structure would unlock. I think about it like a flight plan. If you're trying to go from point A to point B, there are multiple ways to do that. But the right route you pick can determine how much fuel, time, and efficiency you can pick up along the way. Structure is your flight plan, and most people file it once at the beginning of their structure and then never look back.